Welcome to the Consumer Financial Protection Bureau's public meeting of its Community Bank Advisory Council, or CBAC. My name is Zixta Martinez. I'm the Associate Director for External Affairs at the Consumer Financial Protection Bureau. Today's public meeting is being held at the CFPB's headquarters in Washington, D.C. This is the CBAC's second public meeting of the year, and as always, we have a packed schedule. Today's public meeting is being recorded and will be available at consumerfinance.gov. You can also follow CFPB on Twitter and Facebook. Let me spend a few minutes telling you about what you can expect at today's CBAC meeting. First, I'll introduce the Bureau's CBAC members. For some of them, this will be their first public meeting with the CBAC, and we are happy to welcome the new members to the Advisory Council. Following introductions, the CFPB's Director, Richard Cordray, will provide opening remarks. Following the Director's remarks, the new CBAC Chair, Guillermo Diaz-Rosalat, will conduct the meeting, and he will introduce Gary Stein and Sarita Frateroli, subject matter experts in the Bureau's Division for Research, Markets, and Regulation. The two will provide an overview of the Bureau's guiding principles for faster payments and lead a discussion with council members on the subject. The public meeting will adjourn at about 4:30 p.m. today. The Bureau established a Community Bank Advisory Council that includes representatives of small community banks from throughout the U.S. The CBAC has provided substantive information, analysis, operational expertise, knowledge of community, and feedback that has served to better inform the Bureau's policy development, rulemaking, regulatory implementation efforts, and consumer engagement work. Today's public meeting and discussion is in support of this important responsibility. As a reminder, the views of the CBAC members are their views. They're greatly appreciated and welcome. However, they do not represent the views of the CFPB. So let's get started with an introduction of our CBAC members. The chair is Guillermo Diaz-Rosalat. Guillermo is President and CEO of Continental National Bank in Miami, Florida. The vice chair is David Reiling. David is CEO of Sunrise Bank in Minneapolis, Minnesota. Jonathan Allen is Chief Compliance Officer of Bank of American Fork in American Fork, Utah. Angela Belke is a Vice President with American Bank and Trust in Huron, South Dakota. Kathleen Cook is President and CEO of the Village Bank in St. Library, Illinois. Julia DeBerry is Senior Vice President for Risk Management and Internal Audit at Bath Savings Institution in Bath, Maine. Michael Gallagher is Executive Vice President and Chief Risk Officer at Enterprise Bank in Lowell, Massachusetts. Jack Hopkins is President and CEO of Core Trust Bank in Sioux Falls, South Dakota. Ricardo Leal is Community Lender and Senior Vice President of First Community Bank in Harlingen, Texas. J. David Motley is President of Colonial Savings in Fort Worth, Texas. Kara Quick is Vice President for Compliance of First Hope Bank in Hope, New Jersey. Thomas Spitz is CEO of Settlers Bank in Windsor, Wisconsin. Monica Thomas is Executive Vice President of Illinois Service Federal in Chicago, Illinois. Christopher Triplett is President and CEO of Newport Federal Bank in Newport, Tennessee. Catherine Underwood is President and CEO of Ledyard National Bank in Hanover, New Hampshire. We also have with us Matt Cameron, CFPB, Senior Advisor for the Bureau's Advisory Board and Council's Office. I'm now pleased to introduce Richard Cordray. Prior to his current role as the CFPB's first director, he led the CFPB's Enforcement Office. Before that, He served on the front lines of consumer protection as Ohio's Attorney General. In this role, he recovered more than $2 billion for Ohio's retirees, investors, and business owners, and took major steps to help protect its consumers from fraudulent foreclosures and financial predators. Before that, he served as before serving as Attorney General, he also served as an Ohio State Representative, Ohio Treasurer, and Franklin County Treasurer. Director Cordray?
Thank you, Zixta. I want to welcome you all to this meeting of the Community Bank Advisory Council, which has been convened to talk about consumer challenges in payment systems. I want to especially extend a warm welcome to the newest members of the Council who are joining us for the first time since their appointment this year. I also want to thank Guillermo Diaz-Rousselat for assuming the role as Chairman and David Reiling for assuming the role as Vice Chair. We have many good discussions and much good work ahead of us. As the Director of the Consumer Financial Protection Bureau, I recognize the importance that community banks play in the lives of many consumers in many neighborhoods and small towns across the United States. When I joined the Consumer Bureau, I came with a strong viewpoint that community banks are the backbone of many communities and were not among the causes of the financial crisis. In fact, I saw this firsthand from my work with community banks, first as a county treasurer for 4 years, then as the State Treasurer of Ohio through the difficult financial problems of 2007 to 2009. We started this advisory body to give us more insight into the daily operations of our community banks. Over the past few years, we've come to rely on it as a key source of information, analysis, and recommendations to better inform our work. Today, we would like to learn more about what you have to say about electronic payment systems and the faster payment systems that seem to be imminent in our financial system. We want to hear what you think are the challenges for consumers, and we want to hear what you think are the challenges for community banks. As you know, when consumers are making payments, whether it's to pay regularly scheduled mortgage debt or simply to buy a cup of coffee, they have multiple options. These may include paying in cash, writing a check, swiping a credit or debit card, and entering information online for an electronic payment. In general, non-cash payments are primarily processed through one or a combination of payment systems, including the Automated Clearinghouse, or ACH, PIN debit, the credit card network, wire network, or check services. For these non-cash payments, there can be a delay of anywhere from several hours to several days between the time when the consumer initiates a transaction and the time when the other party actually receives the money. And it is important to note that all existing payment systems, including those involving cash, expose consumers to some risk of loss or to the security of their information, including in some instances risks of unauthorized or fraudulent debits. As community bankers are well aware, the payment system participants, including payers, payees, providers, institutions, and operators, are subject to regulations that were adopted to ensure more consistency and predictability to all of the parties involved. In general, these systems work pretty well. But as we've worked on these issues at the Consumer Bureau, we've come to believe there's room for improvement, and we found that most in the industry would agree. Specifically, we have 3 primary areas of concern: transparency, security, and access. First, we believe transparency can be improved within the electronic payment space to help consumers make more informed decisions and take greater control of their economic lives. When consumers make a deposit into their bank account, it's often difficult for them to know when the funds will be available. This is most often the case when consumers deposit a check. For some, these uncertainties are of little consequence because they're able to maintain a healthy cushion of funds in their accounts. But many other consumers struggle to keep up with their expenses and have no such cushion. Not knowing when a payment will be credited or debited can cause significant confusion and anxiety for those whose bank accounts can be precariously low on funds. Toward the end of a pay period, many consumers find themselves playing a high-stakes game of chance without being able to understand or control the exact timing of their payments. Too frequently, the results for these struggling consumers include a set of expenditures they can ill afford, the high cost of overdraft and non-sufficient funds or NSF fees. Consumers deserve better. They deserve transparency. They deserve to know exactly where their money is so they can make informed choices about how best to manage the ways and means of their lives. Second, the Bureau sees room for improvement when it comes to protecting consumers from loss, theft, or mistreatment that may arise from payment security problems. The ACH system, as it currently operates, depends on the routing and sharing of sensitive bank account details. While seemingly benign, this routine practice can be fraught for consumers. It can expose them to great risks, particularly if unscrupulous people or businesses are granted access to their hard-earned money. When bad actors take advantage, consumers can find themselves paying for charges they never authorized. Sometimes they can find their accounts subject to ongoing phishing expeditions as repeated and expensive attempts are made to collect a payment. When this happens, consumers expect their own bank to be on their side. Unfortunately, we know that institutions cannot always provide them with adequate protection, such as successful stop payments, notices of revoked authorization, and an effective block on repeated attempts to process payments from the same source. The Bureau wants to make sure that consumers are protected from getting stuck in such situations. Consumers should not be subjected to unauthorized payments or phishing expeditions. And in situations where they're being victimized, consumers need to be able to reverse the unauthorized charges or prevent the unauthorized billings. Our third concern has to do with access, and we believe there's room for improvement here too. Electronic payment systems are critical pieces of our financial ecosystem today. They make our modern lives much more convenient, from making automatic monthly car payments to being able to use a card at the corner store to buy bread. However, a substantial number of consumers have no access to electronic payment systems and the benefits they provide. Indeed, the current payment systems do not seem to be meeting all the real-world needs of certain consumers. According to a recent FDIC study of the unbanked and underbanked, almost 1 in 5 consumers with incomes under $15,000 a year report having used a check casher, as do 1 in 6 consumers with incomes between $15,000 and $30,000 a year. When these consumers receive checks, they typically fork over up to 3% of the face value to get immediate, no-recourse access to their money. For other consumers living on the edge, and millions upon millions of Americans do so, using check cashers or money order services is their primary way to avoid costly late fees on their phone bills or rent checks. Because they lack an account that permits them to make their payments electronically, these consumers forego many federal protections and can spend more time and money paying their bills than other consumers who have bank accounts. The Consumer Bureau has been persistently advocating for the development of faster and safer consumer payment capabilities in new and existing payment systems. During today's discussion, we would like to hear from you about how community banks are experiencing issues in the payment space. Among our discussion topics, we want to know what you think about some key questions. What are small financial institutions doing to accommodate and improve consumer needs? What new developments are your institutions currently involved in? If your institution is not involved, what are the barriers to entry and how can you bring your perspective to the table? We're now seeing companies in the fields of technology and finance that are beginning to develop real-time or near real-time payment systems for the American economy. These new systems are aimed at reducing pocket-to-pocket payment times between consumers and businesses or other entities. The Bureau recently outlined some guiding principles to govern these new systems as they're being developed. We want to ensure that consumer protections are at the forefront. So our principles, which we will be discussing today, relate to areas such as funds availability, resolution protections for fraud and error, and payment system accessibility. We think it's reasonable to expect that the greatest economy in the history of the world, which has given rise to some of the most sophisticated technology that human beings have ever seen, would have an electronic payment system that we can all be proud of. That system should be one where people can get access to their hard-earned money in real time, their transactions are completely transparent, they know their money is secure, and they can get their money back if a payment is erroneous or unauthorized. These features would make an already impressive payment system even better. It would restore trust, it would bring more people into the fold, and it would simply be good business. I look forward to engaging in this important discussion. Thank you.
Thank you, Director Cordray and Sixta. Welcome to the second meeting of 2015 of the CFPB Community Bank Advisory Council. I'd like to welcome members of the public as well as new and returning members of the Advisory Council. The CFPB organized this council in 2012 as a means to hear regularly from community banks from all over the country, specifically because the CFPB does not supervise community banks with assets below $10 billion. To date, it has been a productive exercise, and it has provided an opportunity for community banks across the country to raise emerging issues facing community banks and share their input and perspectives on the Bureau's work to protect consumers. During this afternoon's meeting, we will hear from the council members on consumer challenges they have encountered in the payment space, with a special focus on the new faster payments systems the private sector is seeking to develop. Today, we will hear from CFPB staff Gary Stein, Will Wade Gary, and Sarita Frataroli, who serves as Bureau experts on these matters. We will then shift over to a discussion with council members to gain their perspectives on what are some of the key issues for community banks and where the CFPB ought to be focusing its attention. During the time, I'll ask council members to share their thoughts and opinions, as well as ask questions on these important topics. Before we begin today's discussion, I'd like to invite Gary Stein, the CFPB Depositors Market Program Manager in the Office of the Credit Administration Collections and Deposits Markets. Will Wade Gary, the CFPB Assistant Director in the Office of Card and Payment Markets, and Sarita Frataroli, the CFPB Counsel in the Office of Deposits, Liquidity Lending, and Reporting Markets, to provide a brief update on the work the CFPB has been doing to encourage strong consumer protections for faster payment networks.
Thank you very much, Guillermo. And Will Wade Gary is unable to be here today, but I'm very ably joined by my colleague, Sarita Frataroli. As the director indicated, we see great promise with the advent, I have to watch how I lean towards this, with the advent of faster payments for consumers, both in terms of faster access to their funds, reduced liquidity challenges, and an opportunity in building a new payment system to address some of the challenges that we face in payment systems today. Many technology and service providers have already been at work trying to develop the next evolution of payment systems. And as many of you may be aware, the Federal Reserve kicked off a consultation in November of 2013 to help cultivate the development of faster payment systems in the U.S. And in fact, they launched a task force earlier this year to bring together stakeholders from all over the marketplace to work on this, and I serve on the steering committee of that task force. There are 2 community bank members on that steering committee as well, Jim Ritter from First Bank in Colorado and Bob Steen from a community bank in Iowa, and they're excellent contributors and represent your contingency as well. So as all these efforts have been underway, we felt it was an excellent opportunity, given our reflection of what's been happening in the other payments markets, and as this development is really at the forefront, to issue these guiding principles to hopefully inform and provide a beacon, if you will, to those that are developing faster payment systems, clarify what we would aspire to see in a new payment system, and hopefully enable consumer protection and utility in new payment systems in the most economically viable manner, and that is to help build into the plumbing and the design of the payment systems what we'd hope to achieve, rather than to try to address any shortcomings after the fact, through rules and regulation. And I forgot to click. I'll jump to the next slide. There we go. So as we said, faster payment systems offer great opportunities for consumers, but specifically, there are many different payment systems today, many of which are going through their own accelerations. As you're likely aware, NACHA has approved a ubiquitous same-day ACH program that the Federal Reserve just also approved, and that will go into effect next year. and other existing payment systems are finding ways to become more efficient. But as we look towards these faster payments, I think we're really striving towards more of a real-time payment system and the opportunities that can provide. And the surety of funds that you gain with a real-time payment system. But importantly, the faster funds move, the faster harm can occur as well. And so we feel it's very important to lay out these principles to ensure that as these systems get developed, they're done in the right way. So we have 9 principles. I'm going to turn it over to my colleague, Sarita, to talk through the first 3, and then I'll talk through several after that.
Great, thank you, Gary. So the first principle we have on the list is consumer control over payments. So when building out this principle, we were particularly concerned about issues we've seen in existing payment markets. We were trying to think about how could we prevent issues from happening for consumers, rather than just thinking about what happens when a consumer already has suffered some sort of harm. We were particularly worried about things we saw in our consumer complaints about different ways that entities were debiting consumer accounts, taking payments on days that were different than what the consumer expected, debiting for different amounts than what the consumer expected, or doing things like attempting to collect payment multiple times within a short period of time. So drawing from these concerns, the principles really emphasize the clarity over what the consumer is authorizing, and also looks to put control into the consumer's hands in terms of putting parameters around the payment. So you can imagine a new payment system that does things like allow the consumer to say this authorization is only good for a certain period of time, this authorization is only good for a particular merchant or a particular type of merchant in a particular geographical area. I mean, there's all different ways that we could imagine parameters being placed on the payment, and we think that any new system should consider ways for consumers to be able to limit potential harm or any inconsistencies later on in terms of how a payment is used. The next principle is about data and privacy. So this is a really difficult principle to provide specifics on without seeing how the new systems exist, how they interact with consumer data, how they're utilizing data. But we do have a lot of information today about how consumer data is transmitted and utilized, and how there are gaps and inconsistencies in how consumers are informed about the data that is transferred and how that it's transferred. So I think more generally in terms of how we're thinking of this principle is we're trying to get at situations when consumer data is being transferred, that it's used in a way that benefits consumers. We think that idea more broadly can encompass different ways that data and privacy is addressed in the new and emerging systems. So we envision new systems that keep consumers informed about how their data is being used, which could include who has access to the data, what ways would they be using that data, potential risks from the data being transmitted and accessed by these other folks. I mean, it's difficult because we can also envision situations where consumers can be overloaded by having way too much information that maybe they're not as interested in knowing all these details. So really keeping with the general concept that we want them to have access to information that's beneficial to them, we think can help work out some of those kinks in the systems as they're being developed. The third principle is about fraud and error resolution protections. So we deal with issues around fraud and error resolution protections frequently now through a number of our regulations, including Regulation E and Regulation Z, and we think those protections should apply in any new systems. But also the system shouldn't necessarily be limited by what's included in there. It should be forward-looking. These systems could interact with consumers in ways that are different from existing systems. The fact that they're real-time could pose new risks while also maybe mitigating other risks that consumers are faced with now. So the fraud and error resolution protection should accommodate the way that risks would change based on the faster nature of the payment itself. We also think it's important that the system allows consumers to easily reverse and handle unauthorized transactions. The way systems exist today, they're somewhat inconsistent with how easy it is for consumers to remedy issues that they face with unauthorized transactions. So we think this protection and principle interplays well with the consumer control over payment, in that if the systems can provide on the front end ways for consumers to limit how a payment may be used, that it can also help on the back end in terms of fraud and unauthorized transfers, and really limiting the universe where that would be happening. I'm going to turn it back over to Gary.
Thank you. And as I failed to mention in the beginning, but as Sarita alluded, these aren't detailed design specifications. They are principles, and I think that's important. In some ways, these principles are aspirational. The privacy one is an excellent example. We wrestled in developing that one, when there are situations in which consumers, if they were left to control every aspect of their information, could make adverse decisions. For instance, if their information could be used in fraud protection algorithms and things that shield them from other attacks. And so we recognize that there are going to be hard decisions that have to be made, and as Sarita said, it will really come down to the ultimate designs. But laying out these principles as objectives to shoot for, we think, ensures that the designs will reflect them more appropriately. I'd also like to add on the last one about the error resolution that, as Sarita addressed at the end of her points, we see, we have Regulation E and we have Regulation Z to apply to resolving unauthorized transactions, and in the case of Reg Z, some erroneous transactions. We do see and would anticipate that any new payment system would have a multi-pronged means of both avoiding and averting these types of situations as well as resolving them as well. So the intention here isn't to say that there always has to be, every issue will be addressed purely by unwinding, but that also that the system design helps to prevent these situations, again, by providing clarity around authorizations and so forth, as well as when they do occur, provide the means perhaps such as account and transaction information that can be monitored and analyzed to help identify issuers of fraudulent transactions. Moving along, the next guiding principle is one that Director Cordray addressed in his remarks, and that's transparency, and that he illustrated as well. And one of the issues we have with non-real-time payment systems are the consumers can not have perfect information about the status of transactions once they've authorized them between that time and when they've settled, and what their account status may be in the meantime. Although many of you, I know, and many of your industry peers are developing outstanding tools to help consumers monitor their accounts, the timing, which you don't have full control over, still creates a little bit of uncertainty there. In many ways, the fact that transactions may ultimately become more real-time resolves a lot of those challenges, but there will be great challenges in the sense that whenever these payment systems do come about, we don't expect the immediate elimination of legacy payment systems. And so there will be differences in risks that consumers undertake with a new payment system that that compared to what they're used to with ACH, say, or check or debit card. There could be differences in costs and funds availability. And so we appreciate that a new payment system creates more uncertainty, and it'll be that much more important for providers of these payments to be transparent about what those costs and risks are to the degree that they exist. We also feel it'll be important and a great opportunity to eliminate some of the challenges that we address with current payment systems. For instance, one of the other projects in which I'm deeply involved is our inquiry into overdrafts. In a situation in which things are real time, one could envision a world in which there is no such thing as overdraft because the institution can make a real-time decision of whether funds exist in an account and the consumer can execute that payment, or if the funds are not settled into the account, the institution might make a credit extension to the consumer, and the consumer might make a payment by those means, but under which there'd be no scenarios in which a consumer was not sure of the source of funds that they were using. And so there's a great opportunity for transparency in that respect. The next principle we list is cost, and I think we're much more aspirational than quantitative necessarily in this regard, and that's that we appreciate that it will not be free for industry to develop all these great capabilities that we're discussing here. And so we want to recognize that if we do arrive at a wonderful new payment system, but it's so expensive that only corporations or only a select group of consumers use it, then I don't think we've hit the mark completely. And so it's an important, Director Cordray mentioned the unbanked, and there's an opportunity to create a system that's not cost prohibitive, we hope, that can extend greater protections to those that aren't using electronic payment systems today. And so along with that is our sixth principle, access, and we hope that these systems do become broadly accessible to consumers. I'm sure that's an issue, and I look forward to the discussion after this presentation that you all may share. I can assure you that some of your trade group representatives and peers are greatly concerned that some of these systems being designed may make it difficult for smaller institutions to access the system or forced to go through larger institutions. And in general, I think it's important for us that we want consumers to be able to access this and for the system to be useful for the people that consumers pay or interact with to be able to access the system. There we go. The seventh one is also one that Dr. Cordray mentioned, funds availability, which may seem obvious to many of you. If a payment system is faster, one thinks funds transfer faster. It's important that we help to emphasize that faster payment transfer occurs, as Director Cordray said, pocket to pocket. We won't have hit the mark if we ensure that institution to institution funds move and settle quickly, but consumers don't have access to those funds immediately. The eighth is security and payment credential value. I don't know that we have to explain this one tremendously. There's certainly been a lot of unfortunate incidents in the press that we're all aware of with breaches of existing payment systems. While we are not trying to specify the design and we want to remain technology agnostic, we certainly see the virtues discussed in the tokenization and some of the other concepts that have been put forth, and specifically in that they reduce the incentive for breaches by really controlling and minimizing the value of the access credentials. And so that's something we advocate, and it's important also, again, this one combined with the issue we talked about with error and fraud resolution, that we do think we want to prevent these issues as well as help resolve them when they do occur. And then the final principle is strong accountability mechanisms that effectively curtail system misuse, which is the biggest mouthful of all of them. But we recognize that no payment system today is fully governed strictly by federal rules and regulations, And we certainly don't anticipate that would be the case with any new payment system. There will be, as Sarita said, Reg E and Reg Z, and perhaps, ours and the prudential regulators, other authorities that help to govern how these payment systems work. But we also understand that there will be operator rules, contractual and participation agreements for providers, and other things that help to uphold the integrity of these payment systems. And we feel it's important that the goals of the providers in there are aligned in the best interest to help consumers. And so that has to do with where liability is assigned, but also to ensure that commercial participants are accountable for risks and harms that they introduce to consumers, and that incentives are aligned appropriately. And so with that, the last slide merely lists the where on our website you can find these principles. We did publish them on June 9th, but I will turn it back over to Guillermo and look forward to the discussion and your questions.
Good points, and I'll open it to the panel.
Gary, I have a question. I think you said regarding funds availability that we won't hit the mark if funds are not immediately available to the consumer. I believe you used the word immediately. Could you clarify that for us? What do you mean exactly by immediately? Are we talking about a real-time system or just a faster system than what we have now?
Thank you. So I probably conflated two different issues in stating that. I think there's an aspiration for a near real-time payment system, and how I can tell you in the discussions we've had in the Fed task force, there have been some that have wanted to measure how immediate is in terms of milliseconds or nanoseconds. I think that remains to be seen. I think there's a lot to be determined how these systems are designed, how fast payments might traverse across the payment system, and then how quickly funds may get settled could be a separate issue between institutions. The point I was intending to make with that statement was that funds availability has to be thought of in context for the end users. So regardless of how fast the payment system is, whether it's a 5-minute payment system or a real-time payment system, the benefits, if they aren't extended to consumers, if it's two institutions are able to settle a transaction in near real time, but a consumer can't have access till the next day, then I think we would have missed the mark.
Gary, remind me on this. What is the reality now in other parts of the world? In Europe, some of the European countries and some of the Asian countries, what kind of systems do they have in place?
Yeah, that's a great, we didn't make those remarks. In many ways, we are behind many other developed countries. UK, Mexico, Poland, and a number of other countries have really leapt past the U.S., perhaps because of their infrastructure to develop faster payment systems. In the UK, and Australia as well, in the UK, I believe they're currently at the state where payments effectively happen in real time, but the settlement between institutions occurs on a rolling 15-minute basis. And so there is some risk borne by the institutions in that, but that's built into the cost of the use.
So for myself, Gary and Sarita are working with external partners, NACHA, the Clearinghouse, Federal Reserve, and so they're more aware of the practicalities of what can be done and how quickly. But for myself, my aspiration would be the United States should have the same real-time payment system as some of the other advanced, and in some cases not so obviously advanced economies in the world, and that immediately should mean immediately. So that would be my personal view, for whatever that's maybe worth.
One question, Gary. What are the incidence of losses in the European countries on those instant real-time transfers?
It's a great question, and I'm not sure that I have any statistics I could quote you. I do think we can learn lessons from what's been developed. I mean, first of all, we do have with our regulatory structure, with the Regs E and Z, some protections that many other countries don't enjoy. But I do think we've seen instances in the UK where there's an opportunity for consumers to, if something is not implemented with enough, that in a way to give consumers enough forethought when they're making the payment, they can very easily make erroneous payments, pay you when they mean to pay Dr. Cordray, it really speaks to the need to make sure that those that have access to originate payments are really vetted, or that there's a good security line. So I don't know that I could speak to the specific statistics, but I can tell you that I think some of these things they've tried to guard against by the way that they phase these in, and in others they've probably caught up in their need to implement security protocols.
I would assume that if in the UK and Poland and some of these other countries that they were finding significant elements of fraud, they would back off of a real-time system. But if they're maintaining a real-time system, I assume it can work. That doesn't mean it's easy to get there. It doesn't mean it will happen quickly. But this is an area where international comparisons feel very, very relevant to me, because if we're trying to figure out what can be done, it's pretty instructive to see that it has been done somewhere else. Having said that, you know, my own view on this, and I'd be interested in your reactions. There's both trying to understand how this would work for institutions and what's feasible and what the pros and cons would be. There's also for consumers. It feels to me, and this may not be entirely right, but it feels to me that the more these payments actually occur in real time, that would be the consumer expectation. And the confusion for consumers of just not knowing whether it's hitting today or tomorrow or the next day and trying to juggle their accounts, things would just be much easier for the consumer, be entirely transparent. Again, how quickly and feasibly we can get there in the United States, I'm not entirely sure, but I keep wanting myself, as Gary will tell you, to keep the pressure on this.
If I could just introduce one more element to this, and I think the fact, and it seems like we're shying away from it, and that's in order to get to a faster payment system and a real-time payment system, you do need collected funds. That fraud is basically, as we look at it from a banking perspective, particularly community banking, it's really, are the funds there or not? And have we identified the person or the payee and the payor? So the other element to this is, if I know that Matt is the person sending the money and he's sending it to me, if we can validate those two things and the funds are collected, the reduction of fraud should happen significantly, because that's generally the main areas of where fraud exists. I think the thing we wrestle with is we're going to need to move the United States payment system out of a paper system, and it's declining today, into an electronic one, because paper takes time, and it takes time. I mean, you can convert that paper into electronic form. It still takes time. We start to talk about the importance of seconds and minutes, as opposed to, we got a few hours or a day in order to clear this. So it is going to take some, I think, re-education. It does start to eliminate, though, those questions in people's minds of, well, is the money there yet? Well, of course it's there. I push the button and it's there.
And I'd just like to follow up on that. I think banks have done an awful lot over the past 3 to 5 years. If you look back as far as what was the consumer's access to their money and how quickly they could turn over the money, be it Apple iPay or Pop Money or Cash, some of the systems that people are using their mobile phones 24/7 to really transfer their funds, make their payments, make their deposits. We've invested huge amounts of dollars in offering this technology and trying to get that payment process quicker. But more and more we are finding ourselves, from a fraud perspective, being the middleman, and the one between the payee and the payor, and trying to figure out who's responsible for knowing where the transaction took place, or if there were double payments, or if they were charged more than they were supposed to be charged. We become that middle person or that law enforcement as far as deciding. We have a lot of difficulty working with law enforcement to get them to back us and support us. There was mention of two regulations, Regulation and Regulation Z. I think in addition to that one, the bigger one that drives us from a fraud perspective is the Uniform Commercial Code in defining that responsibility of the parties in the entire transaction. I think we've come a long way, but certainly we have a long way to go.
Well, I'd love to take off of that, Michael's comments from the standpoint of, as we move into this real-time type of world, the risks that are created actually need to be shared. And they need to be shared with the financial institution, but also with the consumer. Simple things like updating your phone, if that's the mode of payment delivery, such that the latest patch and protections are on there. These are things that are going to need to be built in. I mean, the majority of fraud when it comes into those electronic is going to be from exposed devices, whether it's an iPad, iPhone, what have you. So there's going to need to be some coordination of those two. In addition to that, when you start to dive deeper or back into the financial institution itself, real-time payments start to put a whole different spin into the back room. Does your BSA AML monitoring have to become real-time as well? Are you managing your third-party vendor who might be helping you with the technology in real time? So what does real time mean in terms of how we facilitate these payments? Because as Michael had mentioned, a lot of times we're playing the law enforcement role in this situation.
If I may build on that as well, there seems to be a real trade-off and a willingness, or at least an absence of awareness on the part of consumers who, through their actions, are willing to trade their privacy for the free access to online resources. And so the presumption that these things will be no cost is pretty ubiquitous these days, and the market will take care of itself. But there's going to be a real difference. There'll be a real heft to what we need to do to protect that information versus the consumer expectation of how that actually works, or whether they're even aware what risks they face.
I'd like to bring up the topic of vendors and our role in vendor management. We all have to access these products through our core vendors, and sometimes it's difficult to work with them. They're big. They buy other companies. Sometimes the product that this company that they've purchased doesn't really talk to our core provider, and we need to have some way to make that whole process easier. In other words, we might be ready to offer the product. We might have the demand for our product. We want to keep our customers. We want to keep the relationships that we've established. And sometimes we feel that our hands are tied because they're not responding to our needs. They're not listening to our concerns, taking the risks that we've expressed to them seriously. So that's different from what other people have talked about, but that's an obstacle that we find in this process.
If I can respond to Julie's comment, it seems like the environment that we're in is the legacy systems, if you will, which I would interpret as slow or not real time, to those that are the fintech, the latest, greatest, shiniest object, which exposes the bank to doing all the due diligence on that company, on that product, and not only from a data privacy standpoint, but from the hardening of its system, to the financial viability of that company, the whole gamut. So there seems to be quite a large gap in the systems providers, if you will, to get to real-time payments. Is it old and slow and legacy, or is it new, fast, and shiny, and maybe a little bit more risk exposure? It's kind of finding that middle ground, I think, to where the risk profile matches the appetite of the bank.
And of course, in the effort to hasten the payment system, you lose, for example, Kathleen, if I would ask you, one of your customers wrote a check or had an ACH transfer that is not in your system, what do you catch that on a daily basis? Or Angela, for that matter?
Go ahead.
If somebody writes a check and
yeah, that is not in their standard. That you watch your payments. That
yeah.
Your bookkeeping department
Yeah.
watches those payments coming in, and if something that is not correct, immediately they erase it, and that's not on the automatic identifier. This is a human element that is now, that of course you're putting it down
Correct,
down the
yep.
side.
And
Well,
you have procedures in place for those to watch for those incorrect items or items that are, not matching through or anything like that. So yeah, those are things that we watch for that would be probably creating a stall in the real-time situation.
We have procedures in place also. But we have found in our small community bank that our customers really are not well educated to the problems, and we're small enough that we can educate them on an individual basis. We actually bring them in and talk about, and this is probably old news, but even debit cards today. We do not have the demand that the rest of you have for mobile banking and so forth. We're ready to do it, but we just haven't had the demand. So we kind of have backed off, and I'm really glad to see that you are concerned about the protection of the consumers in this situation, because I myself am very leery of what kind of protections are in place, and these are our customers, and then ultimately, where does the liability lie? So we've had many issues with the debit cards, individuals thinking they would work like a credit card, where, you use your debit card and it comes out of your account, just like it hits you, a credit card might. And 2 to 3 days later, and we even had a customer, it took a month, she ordered something online, they held her funds for 30 days because it was on back order. So these are real issues, and I hope they can all be resolved, and then we'll go forward when it's all protected.
I would just like to add on that same topic that Angela just spoke about. The faster payments does make me a little nervous in that we have a number of programs that are supposed to be monitoring fraud and watching whether it's the ACH or debit card. But I would say that probably 90% of the detected fraud is done by humans. And it's the benefit of being a small bank. We have that opportunity. We know our clients. We know when there's a wire going out that isn't appropriate. And it's sad, but it is the way it is. It's human intervention that's protecting us right now. So if it were any faster, I would worry.
So, I mean, these are excellent comments. And to your point, first, Kathleen, I can assure you that while we were waiting in line there, I got a text from my sister that said she told me she sold her car on Craigslist, and I was afraid to ask her what payment method she accepted if she got a cashier's check, but she took cash, so I felt a lot better. But to your point, and I think we share a lot of your concerns, and you're making excellent points. And so not to be naively optimistic, but I think this is the opportunity that we have in front of us, and that is, how do we shift our paradigm, not just to have to accelerate everything we do today, but to build a system that maybe resolves some of those things. So as an example, I can tell you that many of the stakeholders on all sides really favor if it's going to be faster, it has to be a push system. That is, that the consumer, I don't know that it's clearly defined in everybody's mind, but I think in our minds it would be that the consumer provides that authorization always to their account provider, their bank, and their bank knows. Now, that doesn't mean that things can't happen fraudulently or, I can't, bless you, that I might access Sarita's account or that I make a mistake, but it resolves some of the issues that we see today in the ACH or RCC world, where an authorization is provided to a third party and warranted to the institution. And so I think it's really fleshing out these issues to say, okay, this is how it works now. How do we do it? Because I would agree with you that if our solution is, all right, we've just sped up what everybody has to do, and you've had to add more people, then we probably haven't designed a very good system.
Just for clarity, Gary, for the audience in particular, could you define the difference between a push and pull transaction and how you see some of the different risks involved?
Sure. So, and I think the devil can be in the details here, but the ACH market is unique in that I can tell my bank, through maybe its online bill pay system or something, that I want to pay my utility company, and I provide that authorization by going in and using their function, and they, quote unquote, push the money out to the utility company. Alternatively, I can provide my account number and routing number to my utility company and say, I authorize you to debit my account on this date. In the ACH world, both are permissive, and the originator, my utility company, and its depository institution really are warranting to my bank that they do in fact have that authorization. Some of the challenges that we've come across are when certain originators in this marketplace really are violate the honor system, and they don't really have valid authorizations, or they stretch the terms of those authorizations. I think going forward, it'll be important for us to be clear about, as many people argue, for a push versus pull system, exactly what we mean, because really I think there are two components. One is to whom you provide the authorization, and two, how do the funds flow. Right? So, in the case of even some of the quote-unquote push payments today, I may provide authorization to my bank, and then the bank may contract with a third party, your core service provider, that has the bill pay system, who actually really does pull the money out of my account. But I think as long as the institution has my authorization, or there's a way for me to communicate that directly, I think we resolve some of those challenges.
And then there's push, which typically would occur transaction by transaction, and then there can be pull transactions where you've given a blanket authorization
That's
for
right.
them to pull money out of your account when it's due, which may not always be on a schedule that you're fully aware of, and we see some real risks with that as well. By the way, one of the things you mentioned, several of you, and goes back, David, to talking about the sort of what law enforcement role are you expected to play, just how many responsibilities we're heaping on the institution. But we've had many, many examples of situations told to us by institutions, and especially community banks, where they saw transactions that seemed odd to them, and they have saved particularly elderly customers from being exploited financially, whether through a scam or even something that they themselves were trying to pursue that might be misguided in terms of large transactions that they'd been talked into, or lottery-type schemes and the like. And that's a very important and powerful role that financial institutions play. And I worry sometimes, this is kind of counter to what I said before, if all this becomes totally automated and immediate, if there isn't scrutiny of those things, we'll miss an important protection in the system. You indicated, several of you, that typically is done best by human beings looking at it. I would hate to feel that gets lost in this somewhere, although that's going to be some of the ebb and flow of technology versus human actual manual processes.
A brighter spot in this, I guess, is that inertial forces are overcome. It doesn't seem that many years ago that we were truncating checks. We were not returning paper checks to customers, and that was viewed as a big negative, and that was an important cost structure that we had to embrace. While I can imagine an awful lot of Americans, including my mother, who would want to have nothing to do with this sort of a payment system, most won't find this to be a negative. It will increase utility, and to the point of fraud, as more and more people are looking online, they're getting at this information, they're becoming aware of these transactions in ways that I think most Americans aren't with their paper checks and their checking accounts. The statistics are very high of people who never open a statement, let alone reconcile. So all of this activity is going to be good on the fraud front. And again, it will be viewed as a positive. There are costs and concerns, but the other part that's good about this is because there will be a split of those who want to embrace its usage and don't, these multiple systems, the legacy will have time to roll out, the new will have time to be adopted and processed, and we do have the model in the wire transfer system to really be aware of what it's going to mean within our organizations to be able to start to act that quickly and to put the preparedness in place. So there's a fluid transition as to how this can be evaluated by the industry that I don't think has to be feared.
And if I could just take off on that, just to go into the what can be and actually what is today. I mean, the ability to do a transaction and get a text message and understand what your balance is from an awareness standpoint. Even the ability in which a transaction is going to go through your account and you have an ability on your phone to approve or deny it in real time. Or think of at the end of the month and your automatic payments are coming through and you can sit down and go, yep, utility, mortgage, this, rent, phone bill, and actually push them out as you had mentioned. I think the other thing that I see, particularly with the younger generation, is I don't carry cash anymore. I'll just send you $10 for lunch, and I'll repay you that way. Even to the point of locking your account or your card and turning it on and off so other people don't have authorized access to it. All those technologies exist today in different forms and different fashions. It'll be interesting to see what rises to the forefront in terms of valid technology and what actually protects the consumer and helps the consumer.
I would agree with those comments that the technology does exist today. One of the things I would look for, and I think most bankers would look for, is to make sure that we are placed on a level playing field with other service providers. There are people outside acting as financial institutions through prepaid cards or don't have the regulatory oversight that we have, which is impeding our ability to effectively and efficiently compete with them.
Yeah, excellent comments. I agree. I think one of the other aspirations or advantages we might expect, and some of the comments that you all made earlier about the challenges of dealing with some of the wallets and the PayPals, are that there you really have payment systems that are more or less great consumer conveniences built on top of the rails of older payment systems. And so you've added an intermediary in there, which will put an institution at a disadvantage because you're the ones responsible for some of the resolution and everything. And ideally, that won't be the case in the new system, right? We're not talking about just stretching out the chain, but I think that'll be important. I think the issue that you bring up, Michael, about the non-bank providers will be an important one, and how that vetting works, which also flows into the issue of the directories that you mentioned and how you're paying, the entities that you think you're paying, and that will be important. One issue I failed to mention before, but the director alluded to that I think is important to think about, is this issue of recurring payments. And there's a couple of aspects to it. One is, when this magical system emerges, we certainly don't immediately expect that all legacy payment systems will go away. And so there will be some cannibalization, but it won't be everything. And then we struggle a little bit, as we did on the privacy one, with the concept of recurring payments, because we know that many consumers benefit a great deal by being able to say, just pay this bill every month on this date. I'm so forgetful, I'll be late if I don't do it. And then other consumers, or sometimes even those same consumers, will forget about those payments and may overdraft because they attempt to spend those funds twice. And so trying to come up with a way that provides the convenience but also the control, I think, is a challenge. I would agree with many of your comments that the technology between what can be done with alerts and bill pay is largely there, but I think it will be important to make sure that comes out in the design.
One other aspect of this is backing up into the current regulations and see what still is applicable and what isn't. I think it was a shock to a lot, particularly in the prepaid industry, when the FDIC came out and indicated that these are now broker deposits. And so looking at the way business is done, if you had to look at things from when we were writing checks and using cash only to today's, what other impacts do we have on different regs and how may they have to be changed in order to either accommodate or restrict activities so they're fair and efficient?
I'd just like to make a comment in regards to ACH and the actions of NACHA and the Federal Reserve to move towards a same-day settlement. I think it's from a bank perspective, our perspective, We have a very large ACH processing environment. We think it was very positive for the banks to move in that direction. It has moved us from a credit risk position to a payment risk position, which we can probably handle a lot better. So I think that movement is certainly going to help this initiative and help banks overall.
So one of the things we should keep in mind here is, even though for myself I feel impatient that we should catch up with the rest of the world in this area as well as with the security of credit cards, the chip and PIN transition. You know, these are enormously expensive transitions to make. And we should recognize one of the things that's important to pause here and think about is just how massive have been the advances in payment systems and the banking system and the tremendous convenience this has created for consumers. As long as we can maintain control and transparency and actually the set of principles that they have worked out here, to me, if we can make sure that everybody has that in mind as these technological changes go forward, and the CFPB is in a position to try to help make sure people have those in mind, and that the changes are compatible with them, there's going to, again, continue to be enormous benefits for everyday consumers, which is all of us, in terms of how we're able to manage our affairs potentially, and really potentially bring down costs and create convenience and be able to handle things that used to be much more arduous for people and much more difficult. So I don't mean to be simply critical of the existing system. I always feel like the American system should be better than anywhere else in the world, and it is in many respects, and will catch up in other ways. But it is a rather remarkable system that we're building on, even as we're working to improve it.
Is there any information on, you know, European and other models as it relates to the banked, the unbanked and the underbanked, as systems start to move into this sort of a technological mode? There's already a bit of a divide, and has that caused any sort of social issue? Is there any information on that? Because I think that's important for us to keep an eye on it.
So it's interesting. I mean, I guess Europe would be more of a better comparison. But I could speak more directly to, I guess, the launch of the M-Pesa payment system in Africa, which really helped leapfrog everything, where you went from a population that had really no infrastructure and no technology connection to, without laying down wires, the ability to put down mobile towers and put everybody on mobile phones, and then immediately, the anecdotes I've heard is that, which I know is not the intent of your question, but that those that beg for money would beg for an electronic payment. So clearly that would be some indicator that it's providing some access, but I know that's not really what you're aiming at. I do think there's a huge opportunity in it, and one of the challenges is going to be how do you access this payment system and what type of account, if the account itself, you know, is a requirement and, you know, carries with some of the challenges that consumers face today in getting those accounts, then maybe we don't have that access. And I think there are many stakeholders at the Fed's discussions and others that are very actively interested in that. But I can tell you that is a very front-facing objective for most of the people in the room.
The question you asked, I think it depends on a lot of different variables in different countries. There are a few countries, I think Sweden is one, and there may be a couple of others, where it is, I think, by law that everybody is granted a bank account number at birth that they carry with them throughout their lives. So everybody is banked in at least a technical or definitional sense. That doesn't necessarily mean that all their financial needs are met. We see that in this country. We've had to develop this awkward category of underbanked, people who do have bank accounts, but they're having significant financial needs met outside of the banking system. So, the banking system isn't meeting their needs for whatever reason, and it's worth us thinking about, and particularly potentially business opportunity for bankers who can figure out how to meet those needs within the context of the relationship of the account, which in many ways is always more favorable, I would think. Also in other countries, there are very different experiences with portability of bank accounts, which can matter in terms of if people are potentially thinking about moving a bank account, or whether they feel stuck, or if they are unbanked, how easy it is to get into the banking system. And there's other things that matter. We have a tremendously decentralized banking system in this country, I think unique in the world. Tremendous source of strength, and community banks are the backbone of that. And we all, I think, want very much to maintain it and preserve it. But in other countries where the banking system is very centralized, it may be a very different experience on some of these things. So I don't happen to know the specific answer to your question. For example, as Gary was saying, comparing to Europe, what percentage of unbanked there are, and what kind of needs are being met outside as opposed to within the banking system. But these are great areas for our research team to think about and look at, because there are real comparisons that can be made, and then you can try to explain the differences and similarities. And so this is something they're thinking more about, is international comparisons.
If I could just speak to the access question, I in places like Africa and so forth, there's definitely been an increase, as well as India and Bangladesh, as you see different mobile systems have been able to deliver commerce or payment systems. And again, that does rely on the fact that they can use a device like a phone, even a simple phone, in order to remit and transmit payments. I think some of the access questions, which we may not think of every day, is even the multiple languages that we speak in the United States. You can set your phone to really understand in a different language that will translate it for you. Or if you're disabled, whether that's sight or hearing, you may be able to have a enabled phone or access point there. Even living in very rural areas in the U.S. where you do not have access to a physical banking site, you still can transact. So I think it does really open up the possibilities in terms of accessibility and portability. Again, it comes with some risks to it, but I think what's really been seen in the rest of the world, it's increased access.
And I would add to that so there's the access issue that I think you well described. Some of the other benefits that we hope to achieve with some of these faster payments will be the types of things that really propel someone that theoretically could have access to some checking accounts or a prepaid card today to want to have those products. So as an example, in the Fed, when they before they formed the task force, they commissioned a study, and they identified, I think, 65 different use cases between consumers and non-consumers of who would benefit from faster payments. But one of the ones that always struck me, because we see them every day, are the single shingle service providers, the roofer, the landscaper, people that generally may be paid by check and can't take back their service, if that check bounces, right? And so they would have great benefit today if they get paid. You could see why these people would want to use a check casher to get immediate non-recourse access to their funds. Whereas in a faster payment system where things move real time and there's certainty of those funds, they would have a reason to say, now I'll take an account because you can pay me that way.
And it might even stimulate more economic activity.
That's right.
There might be certain people they would do a job for that they might not otherwise. Yeah.
But Gary, if the landscaper or the roofer is eligible for a bank account, wouldn't he or she already have a bank account?
Yes.
So that they wouldn't be paying these check cashing fees? I mean, there have to be some who we would like to bank, but they can't identify themselves, or they can't meet the regulatory requirements to have a bank account.
Oh, yeah. Don't get me wrong. There are many that do, and many of them have bank accounts. But the issue is, I don't mean specifically about being denied for eligibility requirements. I mean the fact that they may collect many checks over a week and still be in a pretty illiquid state where their expenses are pretty close to their revenues, and so they need immediate access to their funds. And so they can deposit those checks at a bank and rely on Reg CC and the bank's policy, but they could get access in a non-recourse manner to those funds faster through check cashing services that could be provided by a bank or non-bank.
Of course, as you know, people who have run into illiquid situations a few times may well have lost bank accounts, and often they end up blocked out of the banking system for some significant period of time, which may or may not be the right answer, but is the way things tend to work right now. So.
And I think that's consistent with the small employer experience, because it's the surety of payment becomes huge, as well as the desire to get their help paid as quickly and transparently as possible. Hence, why the cash business is still so alive and well, but to be able to take the risk elements out of the cash, to take the cost in the banking system of actually handling and processing cash, it's amazing. I think we all know here at the tables how expensive it really is to handle and manage the cash side of it. This utility, while we are concerned about the data processor cost and development cost and the risks associated with the banking system moving faster, will be wise to go through and count all the benefits that come with this. Moving away from cash is one of them, and I think we've all seen as lobby transactions have migrated away and into electronic means, it's really created an opportunity for us to invest our costs in those right things, the compliance to make sure these transactions are happening safely, rather than the transaction processing. And that balance is shifting, but I think it's shifting in favor of what you're aspiring to.
Gary, do you think there's a possibility or a basis here to, and again, it's maybe more of a dream or a wish in terms of a platform such that you have this universal money movement, even in the immigrant communities that we work in, remittances are difficult. If there's easier ways to facilitate those types of payments as well. Again, now we're starting to take this payment idea of not just real time and in a domestic situation, but in an international situation. Any comments to that effect?
Well, and Sarita can probably attest to this more, because as I've served on the task force, Sarita's been working as part of this legal work group with many of the other stakeholders, and it's a kind of an ongoing debate. There is a great demand to ensure connectivity with other countries and the ability to remit, especially for the populations that we've been discussing. There are many, I don't think anyone denies that opportunity or aspiration. I think some of the debate is about walking before we run and making sure that we can connect our own domestic payment system before we get there. But I think that's very, very much on there. Clearly, the complications, as we know with our remittance rule, increase when you talk about trying to provide surety of payment and access, and not, being able to speak to what's on the other end there.
Yeah, and a good chunk of the issues with that, it wouldn't just be about making the plumbing work internationally, but actually reconciling all the laws, and that may be where the details really hit, yeah.
I have one last thought on consumer awareness and making consumers aware. I think bankers are currently doing a lot to make our consumers aware of what's happening in the marketplace with payments. We have brochures, we do statement notices, we do PSAs to kind of help people out. We have a monthly or quarterly local television show that we put on for awareness, but we can't seem to get the message out there how important it is for the consumer to take ownership of their own accounts, to keep on top of it. I'm not sure if you have any ideas as to how we might better
Please pardon the interruption. Your conference contains less than 3 participants at this time.
I think that's a great question, and as you are, I'm sure, well aware, we have a consumer education and engagement division that works, and I think it's incredibly fortunate that when we were set up to give us that tool, because we know that there are issues in the marketplace that can be affected by regulation, but consumer education and understanding of how to navigate the great utility and variety of tools they have is really important. I think we think about this all the time. I've been very heartened the more I talk with community bankers such as yourself, that I think it's excellent to hear the access that you all have to providing alerts and the kinds of tools that you described earlier, even if it is difficult sometimes in working with your core to make those happen, because I personally feel that between smartphones and some of the abilities that we see here, that these things offer great promise, and we may not yet have seen them fully materialize, or it's hard to measure. So one of the things that we've looked at in Overdraft is the degree to which these types of alerts can help. And it's a hard thing to measure because a consumer may still overdraft when they're monitoring their account or checking their balance and looking at their transactions, but maybe they didn't overdraft nearly as many, and you can't measure what didn't happen all of the time, although we have an excellent Office of Research that can really tease out a lot of excellent information. But some of the information that I've heard from these types of conversations has been that while consumers are beginning to use these tools, they still need to be taught really how to pull information out of them. And so some bankers have mentioned us that people might look at their account balance but not really track the transactions that are in process and status. And so if you're making decisions today based on your balance and ignoring the fact that you authorize 3 payments, and some of which that you all as community bankers can't see because they weren't authorized to you, then a consumer may not be making that decision in full judgment. And I think, unfortunately, we've talked before about it was much simpler when you only had checks and you wrote every transaction you ever wrote in your passbook, savings account, or your checkbook. And now these payment systems provide great utility, but there's a lot for consumers to keep track of. And in a world where you all can't authorize every payment, you can't help them see all those things all the time. And so I do hope that as these payment systems and this authorization processes become even more refined, there'll be greater insight for consumers to be able to do that.
I'll make one last comment. I agree with Director Cordray that I think it's wonderful that we're looking at this and embracing it. And I was thrilled when the Federal Reserve put out the white paper a couple of years ago. I think it's been a couple of years now. And agreed to lead this initiative because it's happening outside our industry, so we need to gather together and do it. I think as a community bank, as we've discussed, the concerns that just should be addressed as we move through are the costs, for one, making sure that it's affordable for all of us, whether it's the consumer or the community bank, to participate in the program, keeping fraud at the forefront. And there is a lot of consumer education that goes on, and we all work very hard at it. I don't have the money to do television shows, but we all work very hard at it, whether it's online, in person, webinars, but it is difficult. And much of the fraud that we do see, not much, but there is some fraud that occurs because of lax protection that the consumer's not doing, protecting their passwords or their computers, et cetera. So if we do go to a more rapid system, if there's a way to put more responsibility on the consumer, I think that would be helpful.
We talked about the security issues, and I just wanted to pass along that, nothing's perfect. And I have a real life story of ACH originator who had unauthorized transactions happen even though they had the fob. and because they did not keep their malware up to date, and it was their computer was taken over, and they left their token device at the computer, and $30,000 disappeared. So it's it's an imperative for these people to take responsibility, because we did everything on our end when we looked through our procedures and everything, but we couldn't control that they allowed their computer to be hacked.
Yep. Well, thank you, everyone. A great discussion. And this concludes our meeting of the CFPB Community Bank Advisory Council. And thank you again for your time, and have a wonderful rest of the day. We're adjourned.
It's arrived. I've heard someone say.